Well, that escalated quickly. Today, guys, we're going to be jumping into the world of Bitcoin. We're going to be taking a look at the charts for BTC and review what's going on and where I think things are heading next. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out. The link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video, and we're going to start things off with, I was going to say the 1 hour chart, but we're not. We're going to skip straight to the daily because the daily chart is really the one that is showing us the most significant changes day on day, right? We saw a breakout on the hourly. In fact, let's go to the hourly just to start there. Why not, right? You can see here. Our expectations were between 31,689 to 32,621. We had our invalidation line. I think it was like 31,800. 802. It's this one right here. So our breakout happened when we crossed $31,804, and we can see obviously we pierced above there, right? So from the hourly chart point of view, it's a clear breakout with nothing much to kind of really talk there. But what is important about the daily chart is where the price actually ended up in the early hours of this morning. Okay, so this here is the Bitcoin CME futures on the daily. Okay, now if you think back to a few of the videos that I produced, must be a couple of months ago, there are two CME gaps on the chart, right? There is one down here. This is $20,330 to $21,110. Okay, that's this one right down here. This particular CME gap, well, actually all CME gaps are created from the open and close differences. Okay, so basically on the CME futures, you get a close position, and then the next day you get an open position, right? And sometimes there's a gap that is created, and you can see one right here, for example. Let me see if I can zoom right in. We can see here you have one wick finishing and another wick opening. And if I go ahead and just put a little box in between these two areas right here and here, you can see there's a gap that's left behind. This is called a CME gap. Okay, it's basically the difference between the open and the closed position. Then, of course, these gaps have a tendency to get filled out. What we mean by that is, if I put that one back there as well, you can see that there's a candlestick that goes through it, or candles that go through it. And in this particular case here, you can see all of these little CME gaps have been hit, right? So every time you see a gap in terms of in this chart, and the CME chart, you can see that eventually it kind of gets filled out, right? And of course, there's a couple here that were not filled out and that kind of were left behind. This one down here at 20,330 to 21,110, and this one up here was 34,455 to 35,180. Okay, these are the two CME gaps outside of one, I think, that is all the way down here at 9,735 to 9,925. Right, there's three gaps on the chart. Now, what's happened is price has moved up and gone into this space of the higher CME gap at 34,455 to 35,180, and we wicked as high as 35,265, essentially filling the gap out, meaning this is no longer a CME gap that is valid and is complete. Okay, now why do we say it like this? Well, it's because there's a tendency for CME gaps to get filled. They don't tend to get left behind for all that long, with the exception, of course, of this little one down here, which spans all the way back to 2020. Which, if we were to see a $10,000 Bitcoin, would essentially fill that gap out as well. And again, that's up for speculation as to whether you think that is a possibility or not, and considering how high this has already gone. One of the things I would say is there isn't really a good structured move to the upside here. It's very much an overlapping short-term corrective move to the upside, and it can still form a big bearish three-wave pattern to the downside to grab that CME gap, right? So that's not something that is going to be kind of put to bed unless, of course, you break above the all-time high. So kind of just kind of put that into context there a little bit. But for the most part, previously what I was talking about was a move up to $35,000 and then a move down to $20,000. And for the most part, I was talking about this approximately around June of this year. Maybe even as we started to pull back a little bit. And for the most part, my expectations were that we'd move to 35 and then we would move to 20. And it was around this time, I would say probably into August, that I started to say it's probably more likely that we go to 20 before we go to 35. I kind of flipped that around. And quite clearly, I was wrong on that because, well, today, we hit the CME gap up here at the $35,000, which does mean the next stop, in my opinion, is down here towards this $20,000 CME gap. I know a lot of people might be thinking that's just impossible. We're in a bull market now. We're going to the moon. And actually, it's not an impossibility. This actually would be a very nice, healthy correction for Bitcoin. And it is not unusual to see such a thing. Let's just go back in time a little ways here. Okay, we have this fantastic run in 2019, and we had a nice, healthy correction down into the latter part of 2019, right? A very nice, healthy correction on Bitcoin that was still pretty sizable. It was a 54% correction. That was outside of the pandemic crash, right? So we can still see a pretty healthy correction up here. And let's assume that we have a kind of a 50% move to the downside, which is something that I would expect us to see. And where does that put you? Right down there on the CME gap. So you can't rule it out, right? It's not an impossibility. A lot of people always kind of get themselves kind of tricked out thinking it is. There is no reason to think that there is anything wrong with this move to the downside here. It shows a very much a nice, healthy, corrective structure going to the downside. It didn't have any of the pandemic-related issues that came at a later date, and it was still a 54% reduction. Okay, and you see this time and time again when you see these natural, healthy profits getting taken, including this 56% move from April 2021 down to the June 2021 before we actually had the blow off top all-time high. And so a move to $20,000 isn't something that you can say and completely dismiss and say it's not going to happen, because it can happen, and a Fed pivot would essentially ensure that that happens. But what it does mean, though, is this move up towards $35,000, it gives us that kind of strength to think it's less likely that we're going to lose the $20,000 support levels. Okay, I think that these levels are likely to hold out quite well. I wouldn't be surprised, though, if there was a couple of wicks that took us down towards 17K. For example, this is the area of interest for me, really 18,900. It's a little bit lower than that, actually. Sorry, let me grab hold of that and snap it to the correct wick. 17,800 to 21,400. This is the range that is really appealing to me the most. We've got a couple of fair value gaps here, and we come down towards that. So if we were to kind of lose 20,000, I think we'd probably slip to 17. But by that point, honestly, you're going to be so oversold. I think you're going to find really good, strong support, lots of buying opportunities, and I think we'll move up. This essentially means, in my mind, there's a high probability the bottom is already in here for BTC at 14,925 on the CME chart. Okay, so interestingly enough, this is actually a really good positive move for Bitcoin to the upside that we've seen here, specifically around the $35,000 CME gap. But a move toward $20,000 CME, I think, is something that we have to consider as a possibility, and we can't just continue these moves to the upside. We have to see a nice, healthy correction to the downside, and we've seen a bit of a move here, but it hasn't really broken this existing low. So I'm looking for a break of the 24,745 line on the CME chart there to kind of really cement that one in. Taking this out into the weekly, we did put to bed the head and shoulder pattern. Okay, so we were talking about this, I think it was yesterday, with the potential for a head and shoulder pattern here on the BTC chart. And well, we've broken above the head, and so that's now put to bed as well. So that's good to see. No head and shoulder pattern there, but we do find ourselves in what I would say is the bearish situation, higher highs and higher lows across these timeframes. In fact, this is probably an ascending wedge, which is not a good sign in my opinion either. So I'm expecting breakdown at some point soon. We're just approaching the overbought area on the weekly, so I am expecting us to potentially kind of continue these pushing or continue this kind of higher range of the 30s for a couple of weeks, but ultimately we are looking for a significant pull to the downside where we are likely to be losing 30k. We'll probably lose the 28k ranges, and we'll be heading more down towards the $24,000 to $25,000 around that 200 EMA line as well. So there's a lot of things to kind of consider here, but for the most part, it's good to finally see the CME gap at $35,000 has been filled. It's great to kind of get that one out of the way, and it allows us to kind of narrow down the charts a little bit more. Unfortunately, a lot of liquidations have occurred because the charts in themselves, they are flashing a lot of bearish signals, as well as some hidden bullish divergences. So, if you don't know what you're looking at, you can kind of get stuck out quite a bit. So we have seen a lot of liquidations, unfortunately. So a lot of retail investors have probably been wrecked, which obviously has fueled the move to the upside in terms of how liquidity is working within the charts, specifically in the futures markets. So we are seeing, a cascading effect of liquidations, which essentially fuels buying so if you're going short, for example, your stop loss is high, your stop loss gets hit, it forces you to buy Bitcoin at the higher price. Buying Bitcoin at the higher price obviously then fuels the price to go up higher. So the more liquidity or the more stop losses and things like that are then higher in the price chart, the more momentum that the price action seems to get, and kind of pushes the price a little bit higher. Same with shorts. When shorts start getting or longs start getting liquidated, price will start to really tank hard because they're forcing selling of the assets. So interestingly enough, we are finding ourselves in those upper ranges, and I think we're likely to start to see a reversal in the price action over the next coming couple of weeks or so. But let me know what your thoughts are down in the comments below. I'm going to leave the video right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.